Hi there, traders. This is Brad Gilbert with the Daily Market Insight for the real Friday, the 8th of October. All right, now leading into non-farm payrolls, bit of a crossover here with the this US debt issue, right? I think it's throwing out the normal equilibrium or balance between equities and treasury yields. It's very rare or weird that you see the interest rate yields going up on the bonds and the equity markets rallying as well. Right, I could only really put it down to potentially the discussions seem quite positive about lifting that US debt ceiling. That's the odd thing. Outside of that, it's a shame that it's almost here because the rally in the treasury yields should see the dollar rally aggressively and the dollar block fall. Now we are seeing a bit of that on some pairs, but then others it's not really there. Right now, let me just give you a look. So now this is like it's a pretty simple approach to the market today, right? The whole idea is stronger non-farm payrolls. We circle these ones and unemployment rate. These are the two key things that you need to be looking at. That's what the market will move on, right? So the forecast for the payrolls 500 and the rate 5.1. If we get those numbers or better, we should see the dollar rally and also see once again. I'll just clear that side of the screen. See those treasury yields continue to rally, right? Depending obviously, and if they're really strong, well, then we're going to see the dollar shoot up very aggressively. Now, I'll come back to the price action around that event when we get there. Looking at the pairs over here, right? As I said, the dollar index is screaming to the top side. Dollar yen looks ready for a move as well. It hasn't moved with this last big upward move in the yields on the bonds. But I'd say it's waiting to see the data before it does move, right? And then we'll probably see it catch up. Dollar CAD pressuring the downside. So you get sort of a downward bias here on dollar CAD, right? So that would suit. Now, if you're looking at trying to trade dollar CAD on this, it would suit weak US numbers and strong Canadian numbers because that's the direction at the moment, goes with that. So that's what you should be looking for dollar CAD. To me, Euro and Kiwi are the two pairs that are sitting neutral, right? You could potentially be trading those both sides. Whilst the Aussie and the and Sterling, right? Aussie is already pushing to the top side. Sterling's trying to break higher as well. That would suit a weaker dollar result, weaker employment number, right? So the idea is dollar Swiss actually, for all that matter, is sort of trading neutral as well. So that could potentially go anywhere. Now, the whole idea of trying to sort of milk some cash out of this is, you know, if we get a good result, we're going to have a trending dollar for the foreseeable future. Right, so that's going to give us trading opportunities. So you don't have to go in with guns blazing and blast your platform up on this because volatility around the release will diminish very quickly, right? You'd expect, you always generally see like a 30 or 40 point bar, like a spike either side, right? That's the immediate 1 or 2 seconds before and after the release where we don't know the number and then the liquidity comes back. 1 minute later, it's thicker. 2 minutes, it's even thicker again, and you get back to normal market conditions. So it could be wise to wait for the result and then start to get in. Now, for those traders who are reasonably aggressive, which is probably most of you, dollar yen, right? It's been following the treasuries quite closely. So that could really work with a strong number. At the same time, we've got a great Ichiban set up here on the downside. That, to me, is a potential pending order, especially if the currency, if dollar yen remains 30 or 40 points above that level. I like that. That's probably the only pending order I would have on this release. The rest of them, I would be looking to trade live, right? That's the sort of face of it. And, you know, the pairs that could move either side, right? I usually focus on where the best trade is. So looking for a strong dollar. So the dollar keeps moving topside, would push Euro down and Kiwi down. Would push Aussie and Sterling down as well. But don't forget, these two pairs here have got a little bit of an upward bias, so they won't move to the downside as easily as, say, dollar Swiss, right? And, well, actually, that'll be strong numbers. Let me just correct that. We've got the dollar block here I'm talking about. As Euro and Kiwi, right? They look primed to go either way. As I said, dollar Swiss is sort of just biding its time. It's like so neutral, it's out of the game completely. It's almost gone to sleep, but it should kick into gear should we get weaker or strong numbers, right? So that's the sort of base of it. Now, let me just come back to dollar CAD because dollar CAD, obviously, we've got oil sort of whipping around the place. Look at the price action here on oil. I tell you what, a $3 or $4 move on oil over the course of a day or so that's starting to get some pretty good volatility, right? Now, you got oil doing that. You've got the Canadian numbers coming out, and you've also got the US numbers coming out. So this is where trading, potentially trying to get something out of nothing is hard. As I say, like trying to get blood out of a stone, because yeah, sure, if the non-farm payrolls and unemployment rate are both strong or weak, in this regard, and then we get, I just drop that down a touch, then we get the Canadian employment numbers being the opposite, right? Then we get the stronger numbers here. Well, you get a great move to the downside, right? But look how many variables there are for the market to consider before they jump into that trade. Now, once again, with the primary numbers, it is for the Canadian dollar, it's just the employment change and the unemployment rate, the two key ones, right? I think it's expecting 65K and 6.9, I think it was, something like that. For you can check trading economics for those numbers. If you get that move, it's clean. But I'll tell you what, if US numbers are strong, unemployment rate's strong, Canadian numbers are strong, like you're just going to get chopped up in this crazy sideways loose price action, right? So it's almost too hard to trade. Next month, the Canadian employment numbers will be released separately, and that's where it's a bit easier. Right, so what I would be doing is really focusing on these numbers. Have a look if they're strong or weak, see what the impact is as well. If you want to be a little bit more conservative, wait to see the number drop, see what the price action's like, see what the impact is immediately on the treasury yields. Now, if the number is strong, say like 750 and 5%, well, we should start to see the treasury yields rally. If they don't, well, something's amiss. It might be buy the rumor, sell the fact, okay? Because the treasuries have moved a long way since last week. But these are things that you need to consider afterwards. Before you come to the number, you have to know exactly what pairs you are trading, right? What instruments you're going to trade on a weak number, what ones you're going to trade on a strong number, because they are not the same at the moment. There's an imbalance of direction across the dollar block and some of the dollar pairs, right? Work out how much risk you're going to put on, and then work out if this goes pear-shaped on you, how much you're going to lose, right? Then you can sort of work out whether your trade size is big enough, whether your stop loss is big enough to hold in to the trade on the initial volatility. To me, the easiest situation is really narrow down the pairs that you want to trade here, right? I like euro because it's a sitting duck. It's got downward direction, strong number here. Should see it just fall to the downside with no barriers. There's no support levels around here. Okay, Kiwi's got a support level down here, but once again, it's trading quite neutral, as is dollar Swiss. These three pairs here, and it's pretty rare for me to get into dollar Swiss, but euro, Swiss, and the Kiwi, right? If we get strong numbers, dollar Swiss should rally, euro should fall, and the Kiwi looks like a good one to sell as well. Obviously, dollar CAD could fall, but it's going to depend on the Canadian numbers, and potentially a strong number or weak numbers. Really looking for maybe just dollar yen, right? All right, so you've got so much choice. This is actually not rare, but we've had so many numbers for so long where we don't really have clear ideas on what pairs to trade. We do here. Actually, just about all of them are at good levels to be trading, either one side or the other, some pairs, both sides, right? The key to this is like keeping a clear head. Have a plan beforehand, as I said. Keep an eye on the numbers, know what's forecast, keep an eye on these two things. The market will react very quickly to the non-farm payrolls change first. That's where the first price action move will come from. The secondary result, which is a couple of seconds later, the first retracement will come from the unemployment rate. Now, if these things are strong, there is no retracement because the retracement is another injection to the top side, right? So just be aware the payrolls number is the key. The second number, the unemployment rate is there. And you might want to have a look at the average weekly earnings there as well. If there's some massive variance on that, well, then you could get caught up on that as well. Right, it's a big number. Now, I know a lot of sites out there, a lot of journos, everyone says, oh, come and trade the non-farms. It's problematic. As I said, liquidity at the time of the release, we've got no control over that. And that's where the biggest problems occur. Right, we know if it's going up or down on the numbers, but if you can't seriously manage the execution, you got to stay out or just keep the trade very small. This is a great opportunity, guys. As I said, I'm more looking forward to strong numbers. And the reason for that is it gives us probably a dollar trending market for the potentially till the end of the year, right? That'll be awesome to pick off all the various instruments. So good luck. Get yourself planned up, tune up your charts, and get ready to trade. All the best. Cheerio.